Hello and welcome to Bytesize Newscast number 3. Today we'll be covering the following topics. First off, the ECB, EU, and economic outlook for Europe. What does the future look like? Next, upgrades to the Bitcoin blockchain. Doesn't happen that much, but today we'll be getting a closer look at the Taproot upgrade. What does it mean for Bitcoin? Then, will Bitcoin replace gold? The eternal question. Let's have a look and see what the CEO of Blackrock said on the topic. We'll also be having a look at the flow of Ethereum as it leaves exchanges and moves into smart contracts. And finally, we'll delve into the hostile takeover of Cathie Ark Investment Management. Alright, so I'm pretty excited. Let's get started. This article is on the economic outlook of the EU and some of the measures they've considered to get the EU through the COVID crisis. Without a doubt, the COVID crisis has been much of an economic crisis as it's been a health crisis. And the reason I want to point this out is that the EU has been economically plodding away fairly consistently, but nothing of note, especially the last 5 to 10 years, steady growth, but especially when you compare it to like the US and especially China, the economic growth hasn't been that great. And what this means is that eventual recovery in the EU will also be much slower than these two regions in the world. And this is something the ECB, European Central Bank, seems to be fairly aware of. Now, what makes matters worse is the fact that the EU is in the midst of a second wave of corona and consequent shutdowns. And these happen in different countries at different speeds. So there's a lot of desynchronization, so to say. And like many of you know, restaurants, cinemas, bars, and other public places have been closed. And in order to stop these guys from shutting down completely, permanently, the governments have stepped in and kind of supplemented these public spaces like crazy. And this seems to be keeping many of them afloat and seems to be the solution to this problem in the short term. So the money that comes in from the EU is described in this next generation EU package. So let me quote, the ECB believes that the next generation EU package must become operational without delay. Investments and reforms, if oriented towards medium and long-term challenges, can in fact build a bridge towards a successful and inclusive recovery. So if you're interested in this, the EU has been fairly open about it, and they're going to put like where they're going to put that money to work. And their website, I'll actually put a link down below, has a timeline on exactly how and where they put this money to work. So if you're interested in this, I'll put a link down below. It's pretty interesting to have a look at, especially if you're European. Now, what is important to get your head around is the fact that pumping money into the economy, uh, and increasing the fiscal policy is something that can work in the short term, but is not sustainable in the long term. The effects of long-term pumping money into the economy would be just insane inflation. Venezuela level inflation. And needless to say, the ECB has already cut itself some slack by adjusting the inflation target from a strict 2%, that's to saying that 2% is kind of like average. And what this means in a language that you and I will understand is that inflation for the time being will be higher than 2%. And what I think is pretty cool is that the ECB understands that there's going to be some serious long-term consequences to this COVID crisis in terms of the economy and expansionary fiscal policy, and that in order for this money to have a net positive effect, meaning that other than just blowing up the money supply and inflating the problem away, if this money is actually spent wisely, it may actually be beneficial in the long term. And this kind of idea is very Keynesian. It's a Keynesian approach to spending money, right? So the ECB plans to spend these funds on environmental sustainability and digitization, which in my opinion is exactly where money needs to go. I must say these terms are pretty catchy and I will make a lot of people nod and agree that this is the right way to spend the money. Um, but these goals have been the EU's goals since forever. So it's not really a change of stance as much of a continuation thereof. So another way of saying never waste a good crisis, right? So, but more importantly, what does it mean for you and I? the average day people. Well, essentially, we have to protect ourselves against this inflation. So get yourself some inflation-proof assets that fit your risk profile. At the same time, understand that at some stage in the future, be it like 2, 3, 5 years, the supply of cheap money will stop. And this will cause some serious economic slowdowns because no more fresh money is being pumped into the economy. And I believe that the most evidence of that will be lower prices for houses in the future. The ECB, they're not stupid, however. They don't want to decrease the supply of money like from one day to the next. They expect it to be like, close off slowly as the economy recovers. So I'll keep you guys posted on how this happens and how to stay like one step ahead of the game so you can prepare for this eventual slowdown and how you can, best take advantage of it. An interesting side note is, let me find it. There we go. Debt cancellation. Debt cancellation, like straight up forgetting debt ever happened, was considered. This kind of reverbs with this great idea or this great reset idea that's been gaining some momentum lately. But unfortunately for all you great reset advocates, this is against the EU treaties. So it'll probably never happen. And MMT, modern monetary theory, oh, fucking hell, is much more likely to happen. The eventual printing of money is way easier solution. And oh, I love like that's oh yeah this quote. So I want to end this on this quote because I think it's just a super cool quote by Johann Wolfgang von Goethe. In the realm of ideas, everything depends on enthusiasm. In the real world, everything is based on perseverance. So what this means is, in order for your ideas to flourish, you have to be like super enthusiastic. But in the real world, if you want your ideas to flourish, you have to be persistent. So next time you want to start a new project and you have enthusiasm for days, that just remember that your level of perseverance will dictate the success of your idea. So if you have any cool ideas, just make sure to persevere, man. Guys, it's good news for Bitcoin. Slow and steady seems to win the race, and slow and steady seems to be getting a much deserved upgrade. So as it stands, some of the more complex scripts that are run on the Bitcoin blockchain right now require a ton of computational power. So you can think of like multi-sigs or time locks, for example. And the reason for this extra computational power being required is because instead of being just one transaction, these scripts require multiple transactions. If you transfer money from A to B, it's just one transaction, but if you want to add some like logic to it, it's multiple transactions. And this slows down the Bitcoin network significantly. And it also makes it like, if you want to do it, then it makes it more expensive, right? And what this Taproot upgrade does is that it allows these scripts to be displayed as regular ones. So instead of what this means is that the computational load on the Bitcoin network will be much lower. So where previously it was required the transactions to run a particular script, it now only takes one. And I think this is pretty cool because it allows more functionality on the Bitcoin blockchain, especially in the long term, as it allows developers to write more complex scripts without hampering the network, and it also decreases the cost for running these scripts. So at the end of the day, it lowers congestion and increases privacy because multi-sigs aren't shown in regular transactions, which is great. And as it stands now, the support is about 45%, and this is without the huge Binance chain and another one off the top of my head, which I can't remember. But as long when these two come along, which they eventually will, the hash power is going to be about 59%, which is more than half. So this looks like a dead giveaway. So Bitcoin's about to get a much deserved upgrade. Congratulations to all you Bitcoin holders out there for making your network better. I believe that institutional money is moving into Bitcoin at a serious pace, especially at the moment. And this is actually underlined by this article here. So let's go through it. This guy Rick Ryder, who is the managing director and CIO of global fixed income at Blackrock, he hinted at an interview on CNBC that Bitcoin is on the horizon for a lot of different types of investors. And what I think is the most interesting aspect here of is the fact that Bitcoin was compared to gold, which is hedged to inflation. And he mentioned how millennials are completely into Bitcoin. And on top of that, he actually pegged crypto to emerging markets. So that may not seem like a big deal, but it really is. And the reason for that is that it demonstrates that Bitcoin fits into a lot of different portfolios. It's not just the number one hedge to inflation. It's not just millennials are into it. It's all these things together. And that's a really, really big deal. And just to give you something to work with, the market cap of gold is like 20 times that of Bitcoin. And the market cap of emerging markets is like a million times bigger than Bitcoin. And on top of that, millennials, like, group of people who are responsible for the future, they love crypto. So, and I don't like making statements like this, but let me put something out there. I think Bitcoin will at least go 100x from here. Seriously. It's not impossible to see the bigger picture here. I mean, Bitcoin is interesting for any portfolio, right? And it will become part of everyone's portfolio. If you're an investor, it's silly not to have any Bitcoin. And this consequently will only make the price go up even more due to its limited supply, and more people will find it interesting as the price goes up, etc., etc. So it's like an upward spiral for a second. And just and it's also deflationary, so there's fewer of them out there. And just imagine for a second if the supply of gold had never increased. There was only a limited amount of gold. I mean, the price of gold would be at least twice, three times, four times as high. I mean, it's 2% of gold increases every year. So what it breaks down to is, Bitcoin and by extension crypto, if it manages to capture the market share of these categories, emerging markets, millennials, gold, whatever, it stands to reason that the current market cap isn't even the beginning. And that's really exciting times. I mean, seriously, especially if fellas like these CIOs of Blackrock, which is one of the biggest investment institutions in the world, is putting his money on the line and making these statements, then there is some serious merit to it. So exciting times, ladies and gentlemen. Exciting times. Similar to what happened to Bitcoin, Ethereum seems to be leaving exchanges. And this is a concept that I covered in a previous video in more depth, but in some, less ether, crypto on exchanges indicates that the price will move up. It's a supply and demand issue. Um, the overall numbers with Ethereum aren't as great as they are with Bitcoin, but they're notable nonetheless. And what else is important is the fact that smart contract usage has plateaued since October. This means that since October there hasn't been an increase in DeFi basically. And given the fact that DeFi is like 90% of smart contract usage, that's a big number. So what should be noted, however, is the fact that, since November 1st, the smart contract for ETH 2.0 has gone live. And as of making this video, that contract is about 55% filled. So there's still some room to grow. So there's still some places for ETH to go smart contract wise. And actually brings me to this chart. Let me whip it out for you guys. Here you go. Hope that's in view. Yeah, it should be. You can clearly see the start of DeFi around mid of June. And the amount of Ether in DeFi has continued to increase till about the end of September, kind of October, midway October. And since then it has remained relatively stable, maybe even trending downwards a little bit. And it'll be interesting to see how this metric develops over time, and it's something I'll be covering in depth in later videos. On the other hand, a trend that has seriously continued is the downtrend of the amount of ETH on centralized exchanges. So this was going up, and it's kind of plateaued between March and September. And then as DeFi started to grow, the amount of Ethereum on exchanges went down like a fucking crazy. And the key here is centralized exchanges, because I can tell you the amount of ETH on decentralized exchanges has, maybe even increased. And I don't have any data on this, but with the DeFi development, it stands that this is probably the case. Coming back to discussion of ETH on centralized exchanges, I do believe this trend, this downward trend, will continue for a while. And I do believe that Bitcoin is a little bit, or ETH is a little bit behind Bitcoin at this stage. Actually, oh yeah, let me explain why. Um, when we had the crypto bubble of 2017, there was a lot of retail money, right? You know, like the everyday person who bought into crypto. And these people genuinely thought that they had missed the boat on Bitcoin and were looking for their, their own version of Bitcoin. And this is actually what drove the whole altcoin explosion, which, Ethereum was number one. And the current market, as we have it, we see much more in evidence of institutional money coming in. You know, the Blackrocks of this world, like I mentioned earlier, are actively making the splash into crypto market due to the fact that they realize that crypto is here to stay. And most institutional money is coming out of the woodworks and saying they have 1 to 10% of their capital invested. And when one sheep goes over the fence, the rest will follow. And institutional fucking investors, they may pretend to be the smartest people in the world, but if they see other people around them making money, they're sure to follow. Meanwhile, the retail investors, they're still super traumatized from the crash in 2017, and they do not realize what is happening. And at some stage, they are going to realize what is happening, and they're going to realize they missed the Bitcoin train again. And this will bring in, retail money, which drove the price of Ethereum really high previously. Remember, Bitcoin used to be 20K, now it's 18K. It's nearing its all-time high, right? Ethereum, on the other hand, was 1400, and now it's not even half that. It's like 600. So that means Ethereum potentially has a long way to go before it catches up to its previous levels. So if you're looking for some exposure, I'm not going to tell you what to do. I'm not a fucking investor, accredited investor, or whatever you want to call it. I'm just some dude on the internet. But I do think Ethereum has a long way to go up. So, just my 2 cents. All right. Finally, in other news, Ark Investment Management. Oof, they seem to be poised for a hostile takeover. And for those of you who don't know, Ark Investment has been pretty successful with their investments lately. They have gotten a top 1% return over the last 3 years. So they've outperformed out of 199 other investment firms, and they're the top 1%. And on top of that, their president, Cathie Wood, here in the picture, she has a pretty sizable online presence. And if you don't know, I highly recommend looking up some of her content. It's really really good. Anyways, her company is about to be stolen from her. Well, stolen. They signed a contract which includes, let me quote, an option to purchase a controlling, voting, and equity interest in Ark that is exercisable in 2021. And, said Resolute, uh, notified the firm on the same date that it intends to exercise that option. Um, so it's not clear to me why Ark would sign a contract with these terms, but judging by the article, Ark did not imagine Resolute, which is a stakeholder in Ark, to exercise this option. And this is the quote that makes me believe it. On behalf of the employee owners of Ark, we are disappointed that Resolute Investment Managers and its private equity owners, Kelso & Co., have chosen to issue this unwelcome notice that they intend to seize control of our business. So my prediction is that Cathie and some of her team members will bounce. They'll start a new company to rival that of Ark. And that's simply due to the fact that I don't imagine Cathie and her team working for another company that they don't own. They'll be working for a boss, and I think they just want to do their own stuff. And it's just not in their nature. And my takeaway from all this is just be wary of investing your money in Ark in the near future. So unless you like a gamble, see how this plays out first. Also, my fucking shout out to Cathie. I really hope she turns the ship around and she manages to keep her company. Losing your company to a hostile takeover is never awesome. So I wanted to leave you guys with a cool note, but unfortunately, poor Cathie. Um, Once again, check out some of her videos. She's really, really good content. And yeah, leave her a positive comment in the sections.